Morning, traders. This is Christian from Traffic Trade Group, and this is your end of day as well as end of week market recap for Friday, the 5th of September. What a week it was! I'll get to the price action for this week, which I think was very interesting to say the least. Before I do that, let's kind of just recap what some of the events were for the day and the big movers. But this morning we had the jobs report that came out, coming out quiet, less than expected, and this kind of just reinforced the fact that we need interest rate cuts in this market, or that I sorry, I have to be careful how I phrase this. That the market is looking for interest rate cuts at this point. That is now, it's kind of taken a slower process with the Fed fund futures, or the market just and the Fed implying that. But we are now looking at more than 25 basis points of a possible cut. Hence, you could see 112% chance that they're going to cut interest rates in September. That's 25 basis points, the odds, I believe. So, and the implied rate is down 28 basis points. So, why do I say that? Why do I say that it's been a kind of slow process? I've been talking about this for a while, and I'll go through this really quickly with you. But I think if you overlay this chart, right, and again, what we're talking about is short-term rates. We're not talking about long-term rates. But if you go back and if you look at over time, or if you want to go over 25 years or 30 years, and you look at the relationship between this and the two-year yield, so GG, and I'm just going to bring this up really fast here. And you should be able to see two lines. I'm going to make this line in yellow so that you could see that. But this, and I've said this a couple of times. I'm just going to repeat it. But the longer that you hold rates up around, so it's not just the fact of like lowering and cutting interest rates. It's also the fact of where rates are right now, which I think some have a tough time grasping this. Right, we're not at 1%, we're not at 2%, right, which is like the normal rate of interest rate, or sometimes the Fed uses a term called the neutral rate, right? Or and I sometimes they say that's around 2%. I'm not going to go into that discussion, but what I am going to go into discussion with is right now we're steady and we're sticky at 4.5%. We're sticky there because that's where the Fed wants to keep it at. But every time that they've held it here, and um, Tom McClellan has talked about this a lot too. He actually has mentioned this. He mentioned this way before I did. But if you look at time, what happens sometimes is the Fed over tightens, and then when they over tighten, they have this issue where it takes them too long to raise interest rates. Once they do raise interest rates, then they keep it there for too long, and the more that they keep it there for too long, and the 30-year history that I have up here is it's one of the major factors of causing a recession in the United States. Now, of course, there's been other factors overplay over time. In 2008 and 2009, there was the financial crisis. Investment banks went way too far leveraged into mortgage-backed securities and repackaging them and leveraging them and all of that stuff, which again I'm not going to get into in this video. But they did the right thing is they started to raise interest rates, but they did it, and they waited way too long before they started to do this, and then they held it up here over 5%. And then they had to drastically crash down interest rates to save some of the things. If they would have just kind of smoothed it out a little bit, they wouldn't have had an issue. So now you're seeing this delayed information that you're going to get, that we're getting, which is on labor, in the jobs report today. Which, if you look back, so the information that you're getting has already occurred, right? It's information from from when they originally took this data, when they took surveys for all these things. And notice what the two year yield is doing, which by the way is set by supply and demand, right? And if they would just kind of take a look at what, and I know that they do watch this, right, but I think that they have this fear of being wrong, right, where they've done this before, right, where they've said inflation is transitory and they were wrong and they got really a lot of criticism. So what goes into their judgments is, hey, I don't want to be embarrassed again by making a decision like that. So they wait for an extended amount of time, and then they have to act. and they do this so that they're not that so that they're not going to be wrong, right? And yes, they're not going to be wrong, but you may also be causing a recession by holding interest rates up 4.5%. And again, this is not for everybody, right? There are different, and I've gone over this. I went over this a little bit in yesterday's video. There's various different groups of people that like interest rates up at 4.5%, right? Your ultra high net worth investor or your high net worth investor, right? They love rates at 4.5% because you could just park money and you get paid, right? But if you're the lower end consumer and you need to borrow, right? You're borrowing at a very high rate. And I'm not just talking about mortgage rates. I'm talking about, you know, all different types of lending. Some of these predatory practices where they're paycheck loans, right? Where do you think they're getting that rate? Right, from folks who need their money ahead of who are really in bad situations, right? And car loans and every other situation too. This is hurting those people. So ultra net worth don't are not going to complain about the rates at 4.5%. All right, so that's a big thing today. And now what happened today, so let's move away from that screen, and let's go right to some charts. I'm going to go into the TLT chart. So let me just get the screen set up appropriately. All right, so here's TLT, big move today. Now, again, the Fed does not control. This is floating by supply and by demand and supply. This has made a big move, right? This is the long end of the curve, right? Which we know. Let's look at the weekly chart. By the way, look at that VPOC takeout. By the way, but we know that this TLT chart has been nothing but sideways, right? And I still don't really see much of a huge trade to be doing here in TLT. Now, if you want to go into different bonds, sure, I think that there's better trends. If you lessen the duration, IEF is 7 to 10 year bonds, uptrend, right? What is this, 3 to 5 year bonds, 3 to 7 year bonds, uptrend, right? Look at Shy, right, which is 1 to 3 year bonds. Look at the difference in the trend, right? So folks, investors are more comfortable with shorter durations than longer durations, and that's because that adds risk. About a longer time frame means that you're not going to get your money back from the government, and folks feel more uneasy about that right now because of various different factors, one of which is deficits, right? So they'd rather lend to the government shorter term, right? You get your money back, right? There's less uncertainty than owning a 20-year bond and not getting your money back for 20 years or so. All right. So that's my quick breakdown of what happened in the bond market today. Why am I starting with that? Why am I talking about bonds? Boring bonds, because they are going to affect a bunch of different things when they start to really move. Hence, we can go through a lot of different examples, but look at what biotech did this week. Biotech had a huge week, right? Biotech likes lower rates, right? Housing stocks, they like lower rates, right? ITB had a huge week today, got all the way up to the top of the value area. Remember going back a couple months ago when it wasn't looking like the Fed was going to cut interest rates, right? Or when we weren't seeing weaker numbers in the economy, right? The ITB was all the way down here. This broken of value kept going, right? And we can go through a couple stocks here. Rocket, names that are going to be most sensitive, to me at least, I believe, is names that are going to be doing some of the heavy refinancing, right? Where people have bought a home in the last couple of years and they're itching to refinance, right? RKT, right? Open. This is another one where of course, Open Door Technologies, which is a huge favorite right now on social media, and I get it. There's high short interest. Same thing with Rocket Mortgage. There's over 40% short interest in that name. Now, my philosophy is I don't just own things because they have a high short interest. I like a couple different reasons to do that. And this move in interest rates means that it will probably pick up some of the velocity that needs to happen in the real estate market, right? It's stagnant when interest rates are high because the people who have locked in, right, and who own a home and are sitting there with a low rate and mortgage, they're not really motivated to sell. In fact, they're probably going to sit tight because they can't get a good deal as what they previously had. Rates start to come down a little bit, now it opens up the possibility of movement in the real estate market because people who have a mortgage at a 3% rate, if the mortgage rate starts to come closer down to 4%, they may budge and they may say, okay, now I want to go ahead and buy another house, or sell my house and buy another house in another neighborhood, another region of the country, right? So it does a lot for the real estate market to see rates move off of those really high levels. Now this is still the start of the process, but you could see that what this market really needs and what housing stocks have really done with even just the beginning of a move in interest rates has really moved housing stocks quite a bit. All right, so that's a big move for the day, and that's going to cause a lot of different, a lot of different movements in stocks. So let's look at SPY for. Let's just talk about the indices here for a quick minute. Notice again, I've been doing this comparison from what happened at the end of July and the beginning of August is playing out very similarly. Here's your move down on the first of the month, last day of the trading month, first day of the month, movement up. Notice you have a little bit of a hiccup on this day. Doesn't this look so similar, right? And also it back checked. Look at how this candle, this was on the 7th of August, right? Look at how this candle did the same exact thing, back checked in here, and also just closed right back above the value area for the month. Right in here, same exact thing. This was the value area for the month of August. Am I saying that this is going to play out exactly the same way? No, and I am repeating this from yesterday. But for as long as this continues to be the exact same pattern, I'm going to highlight it because I think it's very interesting. Now, September seasonality. I tweeted this out yesterday. You can go to my Twitter feed, but you have to look at the pattern of, you can't just say, "Oh my God, like stocks are supposed to be going down in September. I don't understand this." Look at the pattern of day by day what that seasonality is telling you. It really, the seasonality gets very weak around the second, third week historically. Again, not saying that that plays out exactly the same way, but it's good to have these factors in mind so that you know what the probability that the probabilities begin to change. And that's what we're dealing with in an uncertain world, is whether or not these things are going to show a tendency to possibly change. Well, what happens around the second, third week of September? Right, number one, we're going to get quadruple witching, or they call it triple witching now. Right, so that's a big event. You're going to get, and that's when the S&P rebalances. Right, where we might get some announcements shortly about S&P and a couple inclusions. We may not too. It's up to the S&P. But besides those one-off inclusions and deletions, the whole indices rebalance. That can cause a change in trend sometimes when things really shift around that much. Also, the Fed meeting that we're going to get, it could be a buy the rumor, sell the news event. So that could cause us to kind of deviate a little bit. But we could also have something like this too, where we just kind of check back once we get to the middle of the month. So again, for now, I'm continuing to watch what happened in the beginning of August to what's happening in the beginning of September, because it's so damn similar. Qs are a little bit different, I think. Um, they did get over this hump, but kind of stayed right here. So a little bit of a rejection there at the first go of it at the top of the value area. Am I concerned with this? Well, a little bit. I think that there's rotation, and a bull market is perfectly normal. Right? Some stocks have gotten overbought, as I went over in yesterday's video, and there's going to be some rotation with catalysts. One of those catalysts is what I just went over with interest rates. Right? IWM, by the way, does look different than what it did in August. Right? It continues to act better and show relative strength. Right? And look at what it did today. right? And this was one of the things when the market was selling off today. I was looking at breadth today. Up volume was only about was not that bad. It went down to like plus 53%. I think for a brief second it hit plus 49%, but it wasn't. It didn't shift to like the up volume being only like 30%. Right, so that heavy selling was probably a little bit of profit taking. Again, a little bit of getting over the tips of our skis in terms of how well this market has done this week. I mean, look at the way that the market finished the last 2 days with huge buy imbalances or MOC imbalances. That's not exactly normal, and it makes sense for some profit taking to go along the way. All right, what else do I want to go over in this video? But I thought I, I thought that today and this week have been extremely interesting. I think also this Broadcom report, I think for whatever reason, it didn't get that much attention. I know that Bloomberg was talking about it, but Broadcom, and this has been the issue, and the issue with a leader, probably in any market, is everybody's gunning for you, right? NVIDIA is the leader in AI chips. They're making a huge amount of money, but there's some companies that are trying to play catch up. Now we've heard like AMD has been trying to do that, but my thought is they're decently behind. But Broadcom comes in, right, and they come in and they have a great quarter. They announced that OpenAI is getting chips from them, and they're the ones who are kind of next in line, I think. And that just means too that there's other players in this market. So I don't think Nvidia that could be possibly or is breaking below its 50-day moving average. Got a nice hammer bar in here, but I just think that there's other things going on just besides this name in this space. I still think that this group kind of scares me a bit. SMH, even though it did finish up 1.2%, had a nice day. I think that there's going to be some winners and some losers in this group. The winners, CRDO, while a very small company, and I mentioned yesterday that they only made like 228 millions, they're tiny, right? But they're probably dips get bought in them. They're a bit extended here, and I'll be waiting for a dip to get involved in my trading account. I am long this name in the TTG trend portfolio. I have been now, I think, for a couple months. So I've made some nice gains in here, but I'll be looking for a little bit of a pullback. ALAB is acting really well too. Look at the dip get bought in this, and it closed above the value area. Another name too that I like in this space is AEHR. Again, very small name. Maybe more of a dip would be a little bit more interesting in this name. Other names that I just want to go through in this video, and then charts, and then we'll talk a little bit about the week's performance. BE. Look at the move today, up 8%. So again, not all growth stocks are faltering, but there are a decent amount that are, and I just think that there's a lot of there's a lot of rotation in this market. DQ, right? I've talked about this one all week long. Hope you made money in this one because I've talked about how I thought that this was a good signal. Um, from what I understand is that China is spending more on solar than the U.S. is, right? So I think that there's a reason that China solar outperforms U.S. solar. That said, I think that at some point solar is still going to be used, right? And for solar, have to, and I think I said this in yesterday's video, or if not, I said it to members. Have to be careful in some of these solar names, right? They're very volatile. Sometimes they look really good, and then they'll kind of back up on you really fast, right? If you notice, this First Solar has done this several times, where boom, 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 and then it completely kind of comes back in and comes back in with decent velocity to the downside, right? It's done this several times, but when it comes back into support, I think is a better place to get involved. Hence why we put it on our watch list earlier in the week. Couple other names, CLS. Oh my God, what a move in CLS. Look at this thing, up 9% today after a huge move this week already. Got to new highs yesterday. I screwed up a trade in this. This is my bad trade of the week. I put on a trade, I think, on Friday in this name, and I took it off on Monday. So I missed the whole move. Shame on me. And it's a reminder too that not every trade is going to work, right? Or sorry, it's not that, well, that too, not every trade is going to work, but you're not going to play every trade perfectly, right? It's impossible, right? As fast as this market is moving, right, you're just not going to do it. Remember, one of the most famous hedge funds investors, Jim Simon, right? I think his winning trade percentage was something like 51 or 52%. One of the most successful hedge fund traders. Why? Because of their ability to manage trades appropriately. Right? They let their winners run, and they cut their losers very quickly. Right? So very important message there. I talked briefly about open. Let me go back to this just for a second. Almost getting to that VPOC up there is 707. There's another name that we saw option activity in today, which I think is very interesting. This is BLND, Blend Inc. I have to tell you, I never heard of this company before. Took out a VPOC today. It's a $5. It's a $4 stock. Excuse me, right? But take a look at the weekly chart. It's breaking above the value area. What does this company do? Well, this is kind of interesting, and this is kind of the fun thing about either. Tracking some of these names with option activity that kind of give you ideas, or also watching what I like to follow is insider buying as well. Blend Labs designs and develops software. The company offers a platform that focuses on mortgage lending, as well as provides an application experience for home buying process for both buyers and lenders. I'm going to be researching this company a little bit more over the weekend, but I think it's very interesting for someone to take like about $1 million option trade in calls today, right in the beginning of the day. Just a couple other names to go over. Cliffs Resources started to move higher. This is also a name that I think is kind of interesting down here. This is the weekly chart. Notice it's back inside the value area. Nice green candle for the day. It is above the 200-day moving average. And I think going long versus the 200-day moving average kind of makes sense. Reddit, another candidate to be added to the S&P. Maybe an outside chance, maybe a long shot, but made a nice move. It stalled out here earlier in the week and is starting to curl back up. AppLovin is another one of those names. I do have a position in AppLovin. It's treated me very well over the last couple of weeks when I've traded it. I've made a lot of money in AppLovin, and I bought it today on the dip, and it worked really well. I bought it at 474, and nice recovery, similar to the last time that I bought this thing on a dip. It made a nice move. I think that was just a couple days ago where I added to my position. All right. Just a couple index charts too that I want to not index but um, sector charts. Look at XME. Right? This is a market leader, guys. Right? I know that the all growth or high growth folks don't like to look at this kind of stuff, but but look at what XME Metals and Mining is doing. You've got both steel companies, like I mentioned, with Cliff Resources, and you've got gold and silver miners in here too, which, by the way, made another new high today in GDX. Market leadership right there. All right, let's get to the last thing that I want to go over here is just the performance for the week. Boom. Um, SPY finished up a 4-day week, so I made sure that this was only 4 days of data, even though it says 5 days. I did put week to date on here in Bloomberg, my Bloomberg API. SPY finished just barely positive. IWM outperformed. The Qs did well as well, even though where did the Qs finish today? The Qs did finish positive for the day. Look at that. EEM outperformed. International developed markets. TLT, which we already went over, had a big week, up 2.3. Gold had a huge week. The dollar flat for the week. Bitcoin was up 3.2%, and growth just barely outperformed value for the week. Biotech, as I mentioned, huge week. Builders, miners, retail, communications, right, which covers Google, Meta, Netflix. Steel up 1.5%. Consumer discretionary, Amazon had a big week this week. What didn't perform well? Energy stocks down, took a hit with the OPEC news this week. XLE was down 3% this week. Transports were down 1%. Utilities down 1%. Industrials underperformed as well. Here's the international performers. I said that was the last thing I'll go over, but it's actually the watch list. We put out this watch list every Sunday. I usually do this Sunday night where I go over charts. I usually put out a full member video on Sunday and where I talk about strategy. And I also put out a watch list where I go over all the previous names and either decide to take those names off or keep them on with new trigger levels. And then I add to different names. So these, all the names in gray were left on for previous weeks. Outperformers there, Unity Software, big week. I did not trade this name this week. Shop had a good week. Arista Networks, which I forgot to go over that chart. That's okay. Reddit, which we already went over. Solar, which I did take that trade this week. Silver Miner did well. Rocket Labs, which I did take that trade. Sorry, I don't have this all up to date for you, but I took several of these trades. So there you go, guys. I will put out the new list Sunday. If you want to get that list, go to tribecatradegroup.com, sign up to be a member. Hope to see you in the trading room. Guys, have a great weekend, and good luck to your NFL team this weekend. So excited to see another game tonight, and my Giants play this weekend. Have a great weekend.